All right, let's talk about getting a mortgage in Canada. I know, it can feel like this huge, complicated puzzle, right? But here's the thing. Once you know where all the pieces go, it actually comes together pretty smoothly. In this explainer, we're going to give you the complete playbook, breaking down exactly what you need, step by step, to land that mortgage and get the keys to your new home.
I mean, of course you are. It's a massive life goal for so many of us. That feeling of having a place that's truly your own. Well, it's pretty powerful. But turning that dream into a reality, it all starts with a few practical and super important first steps.
I want you to think about your mortgage application a little differently. It's not just a form. It's more like your financial autobiography. A lender wants to understand your story, what you earn, what you own, and what you owe. And trust me, the clearer and more complete you can make that story, the better.
So how do you tell that story in a way that gets you a yes? It all comes down to one word: preparation. So we're going to build your mortgage application toolkit together, piece by piece, so you can walk into any lender's office feeling totally confident.
You see, before a lender can even think about approving your loan, they need to verify three basic things: your income, your down payment, and your identity. Having a complete toolkit with all your documents ready to go shows them you're a serious buyer. And honestly, it just makes the whole process way faster and smoother for you. Now, what's really cool is that all the documents you need, they all fall into four main categories. I like to call them the 4 pillars of proof. So let's break down exactly what they are. Okay, the first pillar is the easiest one, just proving who you are. This means you'll need a valid, government-issued photo ID. Something like your driver's license, your passport, or your permanent resident card. Simple enough, right? Next up, pillar number 2, your income. This is a big one. Lenders need to see a steady, reliable stream of income that proves you can actually handle those monthly mortgage payments. Now, how you prove this really depends on how you earn your living.
So, if you're a salaried employee, it's pretty straightforward. You'll need recent pay stubs, your T4 slips from the last couple of years, and a letter of employment from your company. But if you're self-employed, your story's told a bit differently. You'll need your T1 general tax returns and your notices of assessment for the last 2 years, plus your business license or articles of incorporation.
The third pillar is all about your down payment. Now, here in Canada, because of anti-money laundering laws, you have to prove the source of these funds. That just means you can't show up with a briefcase of unverified cash. The whole point is to create a clear paper trail showing exactly where that money came from. And here are the most common ways to do that. Lenders want to see that your down payment is seasoned, which is just a fancy way of saying they need to see a 90-day history of the bank accounts where the money's been sitting. This proves the funds are yours and not some last-minute loan. If you're lucky enough to get help from family, you'll need a signed gift letter stating it's a true gift. And if the money's coming from a previous home sale, you'll need the statement of adjustments. That's the final legal doc from the sale.
And finally, the fourth pillar, your complete financial picture. Lenders need to understand your net worth. It sounds complicated, but it's just the value of everything you own, your assets, minus everything you owe, your debts.
So for your assets, you'll provide recent statements for any investments like stocks or GICs. Those are guaranteed investment certificates. And for your debts, you'll need to list all your monthly obligations: car loans, student loans, lines of credit, credit card balances, the whole shebang. It's really all about total transparency.
Okay, so once the lender has all your documents, what do they do with them? How do they decide how much you can actually afford? Well, they plug your numbers into 2 key formulas called debt service ratios. First up is the gross debt service ratio, or GDS. This basically calculates what percentage of your pre-tax income is going to go towards your housing costs. And that includes your mortgage payment, property taxes, heating, and if you're buying a condo, 50% of the condo fees.
Now, for a mortgage that's insured by the CMHC, that's the Canada Mortgage and Housing Corporation, which you need if your down payment is less than 20%, your GDS ratio cannot be more than 39%. That's the magic number you need to remember.
The second test is the total debt service ratio, or TDS. This one's simple. It takes your GDS, all those housing costs, and then adds all your other monthly debt payments right on top. Think car payments, student loans, and credit card bills.
And for that same CMHC-insured mortgage, your total debt load, your TDS ratio, can't be more than 44% of your gross income. This is the bank's way of making sure you still have enough money left over to, live your life.
This table is a really handy summary. You can see the CMHC limits we just talked about, 39% for GDS and 44% for TDS. But look, for uninsured mortgages, the industry standard is usually a little stricter, more like 32% and 40%. Knowing these numbers ahead of time really helps you figure out your own affordability before you even apply.
So, you've gathered all your documents, and you've passed the affordability test. Awesome! What's next? Well, there are just a few more things to get in order to cross that home ownership finish line.
If you've already found a specific property you love, your lender will also need the MLS listing, the signed purchase agreement, and the property tax info. Oh, and if it's a condo, they're going to want to see the status certificate. That's a document that basically gives the condo building a financial and legal checkup.
And listen up, because this is probably the best pro tip I can give you. Organize everything into a single digital folder before you even start looking. Seriously. When that perfect property pops up, being able to instantly send your complete file to a broker can be the one thing that gets your offer accepted in a hot market. It's a game changer. And finally, please remember, you are not doing this alone. It is so important to build your professional team early on. Have the contact info for your real estate lawyer or notary ready to go, along with your real estate agent. They are absolutely essential partners on this journey.
And speaking of building your team, finding all those professionals can feel like a whole other job. That's where a firm like Muneris Financial Services can be a huge help. Their team actually includes both mortgage and real estate brokers, so they can guide you through a huge part of the process. Plus, the CEO, Mansoor, is a life insurance broker, so you can get expert advice on multiple fronts, all in one place. You can reach them at 778-898-3202, email mansoor@muneris.com, or just check out their website at muneris.com.
Look, the path to owning a home is a journey, but it all starts with that first step, getting organized. Now you have the complete playbook. You know exactly what lenders are looking for and how to tell your financial story with confidence. So, the only question left is, are you ready to start your journey?